Hello, my name is Manuel Blay. I am a lawyer by trade since the early 90s and I became an investor by necessity. I needed to invest the savings derived from my profession. I had to learn how to be a good investor. My first contact with the investment world was in 1992. At that time, a Spanish bank was on the verge of bankruptcy. I thought that eventually the Spanish central bank was not going to let it go down, and that it would eventually be taken over by a larger bank. This is what happened. So I bought a quite sizable amount of shares. As I suspected, the local bank was taken over, and after 3 years, when I finally sold out, my original investment had multiplied by 5. Since then, I became hooked on the stock market. In the year 2000, I bought Hamilton's the stock market barometer, and more importantly, I bought Rhea's The Dow Theory. However, I must say, I didn't have at that time an epiphany. I found both books interesting, but I couldn't see the practical way to apply all these teachings in the market in order to make money. By the end of the year 2002, my family and I decided to move to the Dominican Republic so that I could become a trader and I could trade in the same time zone as New York. The 2000 to 2002 bear market got me mostly out of stocks. And I had the luck that my small portfolio was not badly hurt. I could even say that I make on average capital gains. While not always successful, as a result of my investment decisions, my capital grew and I was able to build a nest egg. Intellectual affinity directed me to invest a large part of my assets in an investment fund by the mid-2000s. From being a client, I ended up becoming a director of the managing company of the fund. It was a real valuable experience as it made me see the practical side of the investment world. The more I learned at the fund, the more interested I was in technical analysis. Since 2006, and following the recommendation of a colleague in the investment arena, I began to reread the books of Charles Dow, Richard Russell, and of course Hamilton and Rhea. Something was intriguing in the Dow Theory. While not still proficient, the Dow Theory helped me avoid unscathed the horrible 2008 to 2009 bear market, which intensified my desire to really master the theory. The real turnaround for longer-term investing came in 2012 when I read Shanep's The Dow Theory for the 21st Century. This was the real epiphany. Suddenly, all the pieces of the puzzle fell into place. Shanep had accomplished what even Rhea was not able to do. I could see for the first time the practical application of the Dow Theory. For the first time, I could see not only theories, but the practical application backed up by hard and fast numbers. I was so inspired and convinced after having read his book at least 5 times that I decided to start a blog in order to explain to the public the entrails of what I call Shanep's Dow Theory. The culmination of my blogging and my hands-on experience has been my joining as a contributing editor at Shanep's service, TheDowTheory.com. I hope I will make a meaningful contribution and I can provide some added value.